So internal control, the concepts basically involve all these processes that an organization puts into place to safeguard assets, provide reliable information, promote efficiency, enforce management's policies. And also there's a compliance aspect to that where you want to make sure that you're applying with any laws and regulations in the areas that you operate in. So according to SOX, and this is important, the establishment and maintenance of internal controls is the responsibility of management. So management, if you recall maybe from looking at some of the fraud scandals of the early 2000s, management would throw up their hands. I didn't know what was going on. I can't believe our employees were doing that. That's no longer an acceptable response. Truly, it wasn't back then, but from a legal perspective, it's no longer an acceptable response. SOX does require controls to be management's responsibility, and managers actually have to state that. So we've got three main types of controls that we could consider from a control concept standpoint. First, we have preventive controls. These are the things that are going to deter problems before they come up. Authorization. So if I want to go in and write myself a check for $1 million from a company, authorization can help prevent that. Detective controls. They find problems when they arise. So these are the steps companies go through, or maybe the alerts that are built into their systems that help identify things. Bank reconciliations. They don't necessarily need to happen at the same time. So bank reconciliations take place after the bank statement, or maybe after the bank activity has been downloaded from the bank. So it happens after the fact, but still designed to detect violations of controls. Trial balances are another example. And then finally, corrective controls. These are the things that organizations do to help fix any problems that have been identified. So even things as simple as backing up files in case your servers go down or data gets corrupted, you can then recover them. And as you might imagine, the cost of various controls tends to get higher the later on in the control violation cycle we are. So preventive controls tend to be a little cheaper to implement than detective controls. Detective controls are more expensive once you find an anomaly that needs to be investigated, and then corrective controls tend to be the most expensive. So in a computerized environment, we can think back to the umbrella diagram. General controls are those that apply throughout the organization. Network access, access to various resources, even the process that the company's internal IT development group has for building, acquiring, and maintaining the applications that are in place. How do they document changes that take place, and so on and so forth. Application controls are specific to, like we mentioned, a subsystem or an application within the IT environment to make sure that we have valid, complete, accurate transactions, certainly from an accounting perspective. So we've got all these ideas with regard to controls, but we still have all types of issues that can pop up, lots of different activities that take place in the business processes. It's tough to be able to organize those into a comprehensive and cohesive set of controls. So there are some internal control frameworks that have been put together. Now, companies could build their own, I suppose. And the SEC requires that management does have internal controls set up. Now it has to be based on a recognized control framework. So management has to use some kind of a recognized internal control framework. The most commonly used one in the U.S. is called COSO. That stands for the Committee of Sponsoring Organizations. You may have heard of the Treadway Committee or Treadway Commission in some of your other courses. And this is an outcropping of that. So the internal control framework, COSO is built by COSO, which is comprised of members of the AICPA, which could be members of Audit firms could be members of organizations themselves, Institute of Internal Auditors, Institute of Management Accountants. So different types of accountings inside organizations as well. AAA, that's the academic accountants. So academics are involved in this as well, and regulators. So they meet periodically, assess the framework, build it, help to clarify it, and so forth. So the framework, the COSO framework, is probably the most widely accepted one in the U.S. It covers the entire organization, provides some basic guidelines for evaluating, reporting, and improving on internal control. So within COSO, we have COSO 2.0 and COSO ERM. These are highly related, and you'll see a lot of similarities in them. COSO 2.0 basically focuses on the internal control environment. COSO ERM focuses on risk management, but again, similarities throughout both of them. A third framework is called COBIT. This is the one that's put together by ISACA. We talked about them a little bit ago. Control objectives for information and related technology. And it focuses a little bit more on just IT and some value-based aspects of IT. So it dives a lot deeper into the technology than COSO does. COSO is broader, covers more of the organization. COBIT dives deeper into IT. And then there's the Information Technology Infrastructure Library. This is a set of best practices in all different areas of IT service management, including controls. So one of the libraries that they call them, one of the library sections relates to internal controls. And then finally, ISO, the Internal Organization for Standardization based out of Switzerland, has a series of standards that deal with information security. And they're the 27000 series. We'll talk about all of these, but we're going to focus first on COSO, since that's the one we run into most in the U.S.